Jesse Livermore, a man that became one of the most successful traders of all time despite his lack of formal education. It's mind-blowing how many professional traders frequently cite Jesse Livermore as a major inspiration. Reminiscent of a stock operator, a semi-fictional account of Livermore's life is widely considered one of the best and most influential trading books of all time. The polarity of Jesse Livermore's successes, however, is what makes him such an amazing person to study by traders. One side of the coin represents the pinnacle of commercial successes obtained by an individual, someone who can serve as a role model for what can be accomplished with hard work and in-depth knowledge of trading techniques and market dynamics. Although Livermore conducted his trades a century ago, his strategy is still applicable in many situations today. His trading methods were innovative for their time, and his insights remain relevant today as well. Alright, but how did a man without a formal education and being a self-taught trader get successful? This is his story. On July 26, 1877, Jesse Livermore was born in Massachusetts. His father was a farmer, and his mother was a stay-at-home mom. Jesse was able to read and write by the time he was 3.5 years old, and by the time he was 5, he was already pursuing financial journals. He attended elementary school and, as expected, was exceptionally adept with numbers, especially mental arithmetic. In fact, he claims that he accomplished 3 years' worth of math in just 1 year of school. Under his father's request, he completed his schooling after leaving school at age 14. Jesse's father, who had also quit school at the age of 14 to become a farmer, urged him to follow in his footsteps and devote his life to agriculture. Nonetheless, Jesse was heartbroken by this notion. He desired to pursue his passion for numbers and arithmetic and to forge his own path in life. Due to Jesse's ardent desire, his mother consented to assist him in fleeing the house and made it unknown to his father. She sent him away with $5, which is roughly comparable to over $100 in terms of today's currency value. Jesse was 14 when he started working as a chalk boy at Payne Weber. Since one of the employees was sick, he was asked to fill in. Later, he was hired permanently. His love of statistics made this work perfect for him. Prices were read from the ticker tape. He would then write them on the whiteboard for customers to see. He kept a notebook since he was captivated by price movements while working at this profession. At the end of the day, he would jot down all the numbers and prices in his notebook and observe their patterns. He did this as a side project. Livermore had never traded because he thought you required a lot of money to accomplish it. As a chalk boy, he first encountered bucket shops. The bucket shops were like betting shops where you could back a stock depending on whether it would rise or fall without investing in the underlying asset. With little quantities of money and a thin margin, the bucket shop would take the opposing side of your wager. Livermore saw this as a chance to test his price theories in the market. He checked his notes to see which deals to make. Jesse's first bucket shop profit was slightly over $3. He soon made more than his day job, so he quit to pursue his hobbies full-time. Jesse made $1,000 trading at bucket stores at 15 years old, equivalent to $25,000 now. Jesse's strategy worked successfully against the bucket businesses, and one by one they banned him due to the money he was making at their expense. He had to disguise himself to continue trading, but word spread and everyone at the bucket shops knew who he was. He was prohibited from most bucket businesses in town. Livermore had $10,000 by 20. After 21, this dropped to $2,500. Since his system won 70% of the time, he says he would make more money if he continued with it. Most of his losses were inadvertently caused by his failure to follow his system, a problem many traders still face today. After being turned away from most Boston area bucket shops when he turned 21, Jesse packed his bags and headed for New York to begin trading stocks legally on the New York Stock Exchange. Jesse quickly established himself as a successful dealer in New York. Yet not long after, he had another financial setback. It seems that his successful approach was tailored towards performance in bucket shops rather than the real stock market. He traveled to St. Louis with the intention of increasing his wealth through gambling at bucket shops. He assumed they wouldn't recognize him because he was in a new town with new bucket shops. But he was finally recognized, and once again, he was banned from stores. Instead, he decided to send in intermediaries. He made enough money to return to trading in New York City thanks to his efforts here. Although Livermore had already begun to create a name for himself in the trading circles, it wasn't until the panic of 1907 that his trading skills came to public attention. During this period, he made $1 million in a single day. He profited from the market crash by shorting stocks. After the market collapse, he was worth $3 million. At this point, he understood the market was poor and it could get worse. He had already resolved to prevent a greater market crash when he received a request from JP Morgan, who was putting together a strategy to revive the market. JP Morgan was Livermore's admirer, so he helped. He bought as many stocks as he could, inspiring others to do the same. The market recovered, and many people who followed Livermore made a lot of money. Because of this, some called Livermore a hero. But of course, he had also earned a new level of affluence, which meant he could live in luxury, enjoy yachts, and become part of the elite, going to the most exclusive clubs and enjoying life in the city as a young, rich bachelor. To support his new luxurious lifestyle, he returned back to trading. Jesse Livermore's trading style is well known. He wanted to work alone. In 1908, he breached his rule of seeking advice. He trusted a famous cotton trader's recommendation. Livermore bought cotton against his interests because the cotton seller told him to. However, the trader and others were willing to sell in the market, pushing the price against Livermore. The 1907 crisis cost him 90% of his earnings. By 1915, Livermore's losses had reached $1 million, forcing him to declare bankruptcy. He needed help trading again without a stake. He was given 500 shares to restart trading. Livermore knew he had to play this one properly, so he spent 6 weeks tape reading the markets before making his move. Thanks to the positive outcome of this trade, he now has sufficient capital to engage in further trading. Thanks to the roller coaster ride that was Livermore's trading career, he was able to recoup his wealth and clear his debt in the years that followed. A juvenile speculator who earned and lost millions in the stock market and then came back and gained additional millions, made headlines in 1917 with the phrase "Boy Plunger Scores Comeback in Operations on Wall Street." In 1922, Jesse Livermore conducted interviews with Edwin Leverve for a number of journals. After conducting these interviews, Edwin published Reminiscence of a Stock Operator, which is widely regarded as one of the outstanding trading books. The novel is an imagined narrative of Livermore's life and business dealings. The interviews cast doubt on whether or not the book is based on Livermore's life. As of now, the book is still among the best in its genre. After that, Livermore moved his trading operations away from Wall Street into a more remote office. Prior to 1929, Livermore had begun to recognize recurring trends in the market. He had seen similar patterns to the run-up in the 1907 collapse. In anticipation, he opened short transactions while still feeling confident in his idea. He even started sleeping at his workplace so he could keep making transactions before the big drop he was anticipating. The kid plunger Livermore was, of course, right, and this time period was the most fruitful for his trading career. After the market crisis, Livermore was valued at about $1.4 billion, or around $100 million at the time. Almost everybody had lost money on Black Tuesday, the day the market crashed. Livermore's dramatic decline in wealth began when he reached $100 million following the 1929 crisis. Livermore's mysterious financial downfall and its cause remain shrouded in mystery. It's all speculation. Livermore's personal life was chaotic. He divorced his second wife, who later shot his child. Harriet Metz, whose husband had committed suicide, was Livermore's third wife. She gave out a nasty feeling, so Livermore's kids called her the bitch witch. This caused Livermore's third bankruptcy, but since he had recovered before, he was convinced he could recover again. But the mental and emotional toll of his career and private life ultimately caught up with him, and he couldn't continue. Another reason he couldn't start over on Wall Street was that he was too comfortable with his wife's fortune. Compared to his prior self, he lacked the energy and passion to perform even easy tasks. On November 28, 1940, 63-year-old Livermore was found dead in the hotel cloakroom of the Sherry Netherland in Manhattan. So tragically, he had shot himself. Throughout his life, Jesse Livermore developed his trading skills and became a successful market trader. All of us who invest or trade can gain from the extraordinary success that followed. His trading failure was at least partially attributable to problems that many traders experience. He had a hard time sticking to his trading strategy, which may have saved him a lot of money. However, his personal life had an impact on him. The majority of his trading rules are still relevant now as they were then. They can help us try to avoid Livermore's market mistakes and maybe even help us achieve some success. Thank you for watching, and don't forget to like and subscribe to support the channel. Until the next one, peace.